Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Great to see you all. Great to see some of you all again. We just rolled out of our second ever hot zone session where we take a look at a scheduled high psychological impact, high heat, hot zone where we're looking for that volatility. And that was in the CPI number, which was a huge number. Just a quick aside about that CPI number. We do that live, so you can check that out right here at the Simpler Trading YouTube channel, or if you're watching this on my YouTube channel, head on over to Simpler Trading's YouTube channel, and you can all. Oh, actually, no, I do a broadcast of that, so you can check it at both at both channels. Anyway, I want to follow up with bonds because bonds had probably the most curious response in terms of initially what made plenty of sense, which is to move lower, as we are going to expect the Federal Reserve stays on the monetary policy path that they are on, which is hawkish, which is a rate tightening or rate hiking process as they try to cool inflation. All of a sudden, bonds did this, and that is just sort of the typical volatility response that interest rate products can kind of do. Why? Interest rate products, meaning treasuries and so forth, short, medium, long-term yields, they're funny as opposed to stocks or metals or currencies. More so than any other market, treasuries like to attempt to front run monetary policy. Treasury traders, I should say. It's a unique thing. They're a smart bunch, don't get me wrong. And they will be right, but they will make a number of futile attempts. And the last time that Treasury traders tried to front run the Federal Reserve, I can show you right here what a terrible idea it was. Here's that counter trend move, retracement if you want to call it that, bounce if you want to call it that, rip if you want to call it, whatever you want to call it. It was a retracement of the move that was largely lower, consolidated within the wave. Gang, if you've never put the 34 EMA wave and the grab candles on your charts, look, gang, I call it the wave because I used to like to skip class in college and go surfing. All right. And then price action tends to surf the wave. The grab candles and the wave are really, peanut butter and chocolate. They just go together. And that is the wave is the reason the grab candles change color. And by the way, gang, this is a free indicator. This is something that we decided a long time ago to make free, always has been. You can head on over to Countdown Trader and put that on your chart, and you'll see that even amidst that move, we had one green bullish candle. This was always going to be either a transition into chop or the resumption of the downtrend. And here we are right down at the bottom of the range on the 10-year. And here's the 30. So if you're looking intraday saying, what is that? Well, remember, we're going to see a lot of very strange response, especially in treasuries. You won't see as much by way of shenanigans in equities. And, equities are going to do what? They're going to hate this. They're going to hate this. Why? Because, equities love the fact that the bonds tried to play a game of chicken. They entered the octagon, bond traders against the Federal Reserve, and we can see who won. We're going to see higher rates. You can measure this with the Fed Fund futures. And I did a lot of that in that previous hot zone session. You can check it out back at the Simpler Trading YouTube channel. All right, so now what? Well, this is really echoing the conversation that we had in the free video from last Tuesday. And I don't mean this past Tuesday. I mean May 31, when I did a breakdown of bonds, VIX, and something else. It might have been US dollar. And it was basically my plea to say, please, gang, do not get hoodwinked into the long bond play. This is just a bounce, and this is the treasury traders doing what they do from time to time. They're basically playing that game of chicken. Take advantage of this bounce, respect the trend that was. We also talked about the VIX back then, saying, look, we have a little bit more latitude to see the markets levitate, to see the equity markets levitate and fight the resumption of the downtrend, because the VIX had not quite gotten to this area of the Darvis and the 200 propulsion. Got down there, spent some time there. Far too much was made about moving lower because that just isn't typically what a neutral market that is oversold. Look at that red to green transition right there. There's your signal. I don't wait for signals. There's two signals here. There's that transition that we saw on the 8th. There's a signal that we see here on the 10th, right? But nonetheless, and by the way, that's a 21.3 slow stochastic. And then we have the reason why price might attract a bid at 200. And there's that move higher. And you can see what's happening. So this is just fast forward 10 days. And here we are seeing all that organized. So as always, gang, this show is about your questions. So let's go ahead and dive into them. I'm sure some of you have quite a few questions. So let's get these charts out of the way and dive in. And let's see here. Let me grab the first question. All right, there we go. Love the pre-market set. I appreciate that. Thank you very much. I was sitting having some coffee with my husband. I said, hey, I've got one of those hot zone sessions again today. And grabbed my coffee. He said, all right, go sling some contracts. And, I enjoy doing that very much. And I appreciate that. And yeah, I mean, maybe we'll keep doing these. I thought, hey, straight up, gang, I've got a class coming up. I'm not going to pull any punches with you. I've got a class coming up. We've been preparing for this one for the better part of about 8 months, because for about 8 months, I've been taking a process that I've been doing for probably almost 8 years. We're automating it, we're expanding it, and that is the process of identifying those hourly price movement ranges, those time and volatility levels. So I've been waiting years to actually get this out there and explain it. So I'm super excited. But if you're saying, Rag, I don't know if that's for me, day trading or this time volatility thing, no worries and no pressure. Simplertrading.com/price. See what I have to say. You're definitely going to learn something. If you've ever been to any of my webinars before, we definitely probably do as much in a webinar like that as we do in Charts and Coffee. I really want everyone to come away with saying, gosh, I never thought of that before. In some way, I want to always move the needle in the content that we do. And I thank you all for, pushing me to be better at explaining this game we play called trading. So I appreciate that. When the price goes past the HPMR level, like it's doing this morning, where's a good level to short from? No, right? So if you remember, thank you for the question. If you remember during that live session, I said, hey, that HPMR is designed to give us an upper and lower edge. That's how I designed them to behave based on historical volatility. But when they cross or when they sandwich, I'm being quite literal about the description. When they cross, in other words, the green goes above the red, green support, red's resistance. They should not be aligned the other way. Red should be above green, not the other way around. And or when they sandwich, that is a clear keep away, right? That's the warning, keep away. So a short's going to have to come by way of another setup, not via volatility. And how cool would it be to have a process where your tools tell you, please, flat is a position. That is what that signal is. Flat is a position. I think for a lot of traders, there's opportunity here. Maybe, but what we're being told is there's a whole heck of a lot of risk as well. So I would say no, my friend. I love the fact that a number of my tools tell me not just when to do something, but when not to do something. When to be comfortable saying, hey, let someone else toss some money at this market. It's not going to be mine. How do I control risk and stay on top of that? So thank you for the question. Excellent question. All right, Alan, how are you? Nice call in GC. Alan, that is my pleasure and my job. I'll be straight up. That is my job. And it's a privilege to be able to do it with a group of traders who are as dedicated to being really good, as great as possible as they can be at this game here. So I'm so grateful for the community. Otherwise, I'd just be talking to my cat and he's asleep on the dog's bed and he doesn't give a rip about what I'm doing. So, all right. I think we get a second bite. Oh gosh. Knowing the way that gold's been, I'll be straight up. We've already taken back more than half of that move. Do we get a bite at 38? I don't know, my friend. I mean, we're not that, I mean, we're right back at 42. So I'm wondering if we get a bite at 50 again. We'll keep an eye on it. I mean, just like we set up Natty Gas. Hey, by the way, again, we talked about Natty Gas in yesterday's Charts and Coffee. And a lot of you, and kudos, asked me, Rog, are we going to trade Natty? And that was a heck yes. 8 minutes after the open, I think we sent out the alert saying, hey, let's wait for price to get to this level. I did not think we were going to hit the T1 on the same day, but we scaled out a half the position. And now we have the luxury of, look, see this little pullback right here? This is the difference between this kind of entry, which is what I teach you all to do, versus, say, an entry in this area. We don't want to do that because now that position is underwater. We are just losing a little bit of unrealized profit, which, let's face it, that's not fun either. But it's a whole lot more comfortable, and we're still positioned to take advantage of. Look, this is still a double green market, gang. Am I going to presume higher highs? Yes, absolutely. Seasonally, we are no longer really putting that kind of fuel in the tank higher. But technically, this is still a very valid uptrend. By the way, so that was something we looked at yesterday. And yeah, maybe gold becomes that conversation today. But Alan, I need it to be higher. Yeah, I need it to be higher. All right, can we get some insight into XLE and XOM? You bet, you bet. So let's do it this way. I have XLE up right now, Sam, so thanks. So take a look at XLE. XOM is the number one weighted stock within XLE. There is not a single stock in this group that I do not want to look at potentially buying, not a single one. Yesterday, if you got my notes, I put out notes almost every day. So pretty much 4 or 5 days a week. And, I'm not a big fan of, and every now and then I'll put a weekly report out, but I'm a bigger fan of keeping the narrative going by way of daily notes. So if you checked out the daily notes yesterday, those of you that get those, we put names like Occidental, which is just coming out of ex-dividend date, DVEN, PXD. We put names like that on the list. MRO was on there, and those are still on there. I would actually probably prioritize. And somebody asked me yesterday, Rog, why CVX and not XOM? XOM is fine, but part of our trading process, every one of us, even when our indicators are different and our strategies are different, part of trading is how close are we to the pitch? How close is that pitch to our zone? So CVX would probably get a slight nod just by way of proximity, but they're both by the dip. Sam, absolutely. What's the insight? By the dip, my friend. That's what I'm saying is the path of least resistance. So I do appreciate that. NG buy today, Dave. So I hope I really hammered home. That's a big cup of nope for me. Unless it heads lower, we're managing a winner. We're still sitting with an unrealized gain. And you'll notice where we entered inside the wave, not chasing Momo higher. So thank you for the question. I'm sure it's a common one, but that is a big cup of nope for me. All right. Not that it may not go higher, but I don't believe that I've got a great risk reward balance, or even, I don't even want to balance. I want to see reward a little bit larger than risk. So CTVA, okay. Yeah. Double green above the 200. I like that. Potential pullback buy. We have to start thinking about proximity to earnings. And if you haven't yet checked out one of the, I believe, 2 write-ups that Trish has done here on the 642 earnings window, how do we identify stocks that are going to move in the most, predictable, I hate to use the word predictable, but yeah, kind of in a probabilistic way, predictable way, in front of earnings. How do we take advantage of the window, anywhere from 1 to 1.5 months, so 6 to 4 weeks out, build that watch list and take advantage of those markets. So we've got 2, if not more than that, updates over at countdowntrader.com, where I explain pretty much every step of my earnings trading process. So that might be something to look at too there, Ambas. And then buy the dip. Yeah, I'm fine with that. All right, moving on. Stanley asks, To understand my setup, well, Stanley, if you want to understand how I swing trade, end of day trade, I'll tell you what, you'll probably get, I mean, sure, I would love to say take this class or that class, but you'll probably get more bang for your buck, by just joining 1/4 of my Sector Secrets Mastery. Because you could buy the class, which I'm not telling you not to do, but I'm trying to see if I can just give you more bang for your buck. And I'd say, join me for a quarter, because you're going to get 90 days with me, a lot of live trading sessions, all my setups and trades. You're going to get a number of the indicators that I make available only to Mastery members. That's probably for end of day swing trading, watch list building. It's just not going to get any better than that. On the intraday trading front, if you're interested in, okay, Rag, what's this HPMR stuff you're doing? I've seen these on your charts for years. What's the stuff you're doing on the 5-minute? That's going to be, well, check out the webinar and see if that's something you want to do, Stanley. I'll be the first to admit, day trading is not everybody's cup of tea. And there is risk inherent to day trading. Absolutely. So I want to talk about those risks, talk about the opportunity, and talk about how I'm trading in 2022. That's next week, Thursday, 8 p.m. So my day trading class is coming up on Saturday, the 25th. And this is a class, frankly, about 8 months minimally in the making, and frankly, 8 years in the making, because this is a process and a tool that I developed back when I was a Forex trader. And now we can do this for Apple and XLK and the S&P and do this kind of volatility measurement in a whole lot more symbols. So I'm just super stoked for that one. Stanley, that's my 2 cents there. All right, cash is a position. Joshua, thank you for echoing that. You are so right. Flat is a position, cash is a position. Every now and then when the markets transition and I get stopped out of things, and I'm just frustrated times 2. So I'm getting stopped out of stuff. I know my members are going to be, taking trends that we were trading for a while and get stopped out. And I get frustrated and I get a little salty. Some of you have met salty Raghee. And I'll be all salty and looking for another trade. And I can feel the revenge trade brewing in me. And I'll just start complaining to Trish. And Trish will say, Rag, I think I've heard it somewhere. Flat is a position. I'm like, using my stuff against me. But she's right. And you're right, Joshua. It really, really is. One of the easiest ways to control risk is look at a high volatility event and say, sorry, not going to play. I'll wait for the dust to settle. And the other one is controlling position size. Actually, a third conversation, especially when it comes to contrast between, say, futures and options, is sometimes options, especially just a long call or a long put, where we've limited the risk by way of whatever we paid premium wise for that option, and then risk a percentage of that premium. Another way to really define and attempt to control risk. So there's a lot of things we can do to lessen risk. But one of the most important ones is it's okay to do nothing. Gang, the markets will open again tomorrow, and there will be other opportunities. I can promise you that. I can't promise you anything else in trading other than there will be more opportunities, right? And it's okay to say, okay, I missed that one. We'll find another one. There'll be something else. Yeah. So thank you, Joshua. Good stuff. Next up, Hot Zone was good. Good presentation this morning. Thank you, my friend. I know you consume a lot of the content here, and that means a lot. You're a seasoned, yeah, I appreciate that. It's a very seasoned opinion, and I do appreciate that. I'm enjoying it because the way I look at it, I'll tell you what, Gypsy, the way I look at it is either folks tuning in get to see me put on a good trade like last Friday with non-farm, or they get to see me lose, in which case they see some intense risk management tactics being deployed, or we get to discuss just sometimes you don't get the trade at all. So I figure either way, you guys win. I may not, right? But either way, you guys win in terms of just some kind of hopefully helpful takeaway. All right, next up, Oxy. Yeah, I've got my eye on Oxy, David. I really like this one. Oxy MRO. There's a number of names with FCG and XOP specifically. Those ETFs that I like very, very much. Pulling back on ex-dividend date. Look at the previous pullbacks, David. Past does not dictate the future, of course, but it sure does often rhyme. So I'm just looking for something to look a little bit more like that. I'm not going to be surprised if we kind of do a little bit of this before we continue. Why would I presume it continue? Oh, I don't know. Look at all that green, right? So I agree. I like that. I like that setup. It's one of the ones that's sinking right now. But remember, the problem with sort of the early retracing name is that if XOP or if crude oil and RBOB pull back, Oxy is going to pull back even more. And so just be aware of that. But I do like it absolutely for an entry. Absolutely. All right, next up, Al, good morning. Regardless of having too tight a stop, what's a good general rule for stop setting? Al, what I teach is percentage based and volatility based. And intraday versus end of day is going to be a little bit different. Chop versus trend is going to be a little bit different. But I think probably the most important thing when it comes to stops is affordability, budget. You know, before we look at technically what's merited, can I afford to trade that stock based on the volatility and based on the cost? That's step one. Step two then becomes, what does that stock or ETF or futures contract typically do? And am I respecting that or am I smothering it? Right? So there's there's two schools of thought that I've embraced my entire career. When it comes to taking profit, I follow the take the money and run, Billy Joe and Bobby Sue school of profit management, if you will. And when it comes to stop losses, 38 special, hold on loosely, but don't let go. You need to know where the trade is no longer valid. We don't let go for boredom. We don't let go for frustration. We let go when that trade is no longer valid. And sometimes that's a percentage based, sometimes that's technically based. But when it comes to stops, you don't want to smother. And that is that 38 special school of trade management. So, all right, gang. And just like that, gosh, that 20 minutes flies by. But thank you so much, as always, for all the great questions. Today, we have between 2:30 and 4, the Ask Me Anything session in the Futures Room in the Sector Secrets Mastery. What do we cover during Ask Me Anything? Well, we cover, where do you find, okay, Rog, during the regular trading day, I don't know where to find some of these indicators. I don't know some of the settings for the indicators that you're teaching me. You know, what are those things that I'm doing and teaching maybe a little too quickly during the week because we're actively looking for opportunity where you can take a breath, slow it down, and talk about settings and setups and different types of issues with psychology or position sizing, things like that. And we do that every Friday. So we're able to basically have sort of a tech/support session at the end of the week. All right, gang. So I'll see you for that. Futures Room, Sector Secrets Mastery. I will definitely see you all, Thursday. I'm going to see you all Thursday, June 16, 8 p.m. prime time. If you've been curious about day trading, check it out. It'll probably give you an idea of whether it's for you or not. And if you're wondering, okay, Rog, how are you day trading this year so far? You're going to get a bird's eye view. All right, my friends. As always, thank you for caffeinating and dominating with the crew. I do appreciate it. Y'all are great. What a great community we have. So grateful for it. Have a wonderful Friday. Remember, Friday sort of hates traders. The end of a week is much different than the beginning of a week. The end of something, winding down, has a different psychology than winding up. So keep that in mind, and I'll see you all soon. Be good to each other.